Welcome to our lesson on business processes and information systems. Today, we're going to map a typical purchase order workflow within an enterprise resource planning or ERP system. This process is fundamental to how businesses procure goods and services, ensuring efficiency, transparency, and control. Let's begin. The first step is creating a purchase requisition. This is an internal document used by an employee to request the purchase of goods or services. In the ERP system, the user fills out a form with details like the item description, quantity, required delivery date, and a justification for the purchase. This is the trigger for the entire procurement process. Once the requisition is submitted, it moves to the approval stage. The ERP system automatically routes the purchase requisition to the appropriate manager based on predefined workflow rules. These rules can be based on factors like the purchase amount or the department. The manager can then approve, reject, or request changes to the requisition directly within the system. After the purchase requisition is approved, the purchasing department takes over. They create a purchase order, or PO. The PO is a formal, legally binding document sent to a vendor to authorize a purchase. The ERP system can automate this by converting the approved requisition into a PO, pulling in all the necessary details and assigning a unique PO number for tracking. Similar to the requisition, the purchase order often requires approval before it's sent to the vendor. This ensures that the purchase is compliant with company policies and budgets. The ERP system manages this approval workflow, sending the PO to one or more approvers, such as a purchasing manager or a finance director, depending on the order's value. Once the vendor receives the PO and ships the goods, the next step is goods receipt. When the items arrive, the warehouse or receiving department records the delivery in the ERP system. They match the delivered items against the purchase order to ensure the correct quantity and items were received. This step is crucial for inventory management and financial accounting. Next, the vendor sends an invoice for the goods or services provided. The accounts payable department then performs invoice verification. The ERP system facilitates a three-way match between the purchase order, the goods receipt, and the vendor invoice. This confirms that the company is paying for what it ordered and received, preventing discrepancies and fraud. The final step is payment. After the invoice is verified, it is scheduled for payment in the ERP system. The system tracks payment due dates and can even automate the payment process through integration with banking systems. Once the payment is made, the transaction is recorded, and the purchase order workflow is complete. So, to recap, the purchase order workflow in an ERP system is a seamless, integrated process. From the initial requisition and approvals to creating the purchase order, receiving goods, verifying the invoice, and finally, making the payment. This automated workflow provides businesses with clear visibility and control over their procurement activities.